right, good afternoon. Welcome everyone who hasn't been able to join this small session presenting the workshops that we are going to conduct on strategy QUAM and algorithmic strategy generation. Welcome also to those who are watching on delay. My name is Miguel Jimenez, and I'm going to conduct a brief introduction to these workshops. In the end, I will be available to answer any questions that you may have. One of the first things we should do is to present the disclaimer. You know that everything related to investments, backtesting, etc., requires this disclaimer in the sense that you understand that the hypothetical performance results have many inherent limitations, some of which are described further. No guarantee is provided that likely gains or losses similar to those shown will be obtained, and in fact, there is often a difference between theoretical results. The results of backtests and real outcomes can differ. You know that this one of the issues we can face while working with backtests. It will also be one of the focal points we will work on so that our results in a real or demo account are as similar as possible to what we found in backtests. I strongly invite you all to read the entire disclaimer. All right, let me start with introducing myself. Who am I? As you know, my name is Miguel Jimenez. I have been involved in the world of stocks and trading since around 2005. This arose from someone I know, which is often the case. I was fortunate that this person managed an asset of nearly 300,000 euros at that time, and he was teaching me, let's say, the basics of this whole world. Later in 2014, I became a university expert in R software for statistical studies from the University of Granada. The truth is that this was something very interesting. It was very important for me because it allowed me to delve into this programming language and start my first steps in everything related to the statistical analysis of time series. For those who don't know, R is an extremely powerful software that in addition can use many libraries, can connect with Python, and for those who use it and master it, it's quite interesting. In 2019, I completed a master's degree in financial markets and Forex with Yuri Ravasa. It was a very enriching experience, both technically and personally. So also, we worked extensively on creating strategies and conducting backtests manually. It was thanks to this master's degree that I realized, based on my personality and my expectations in trading, it was essential to automate certain processes. To give you an idea, during this master's program, I developed some strategies where, thanks to software that is used, which I suppose many of you know as the Forex tester, I managed to conduct 3 to 4 backtest operations manually to have a sufficiently strong and reliable statistical base for analyzing these strategies that we were implementing. Of course, really it takes between 3 and 4 months to backtest a single strategy. So what happens when you're doing so much backtesting by hand? Well, it's true that you learn very well to see, to understand how your system works. You learn very well to read the chart. However, it's a time commitment that was impossible for me with the rest of my duties, both personal and work-related. So it was due to this master's degree that I started to become interested in what automation possibilities existed in the market. At that time, I discovered a software named Strategy QUAM. I bought a license, and I did an official training session with them, which is the premium masterclass in 2021. Since then, I've spent these years studying in-depth everything related to data mining and all the possibilities that Strategy One offers. This year, I started acting as a trainer of quantified models with the construction of the Darwin PSI. I've also started a YouTube channel to share a little about all these things named winning trading strategies. Now that you know who I am, it's essential to understand who this training is intended for. These workshops are directed to anyone who answers yes to any of the following questions. Have you ever traded? Have you burned an account? Does programming sound like Chinese to you? Do you have knowledge of the markets but you're not consistent? Do you want to be able to measure your results with an exact and replicable method? Are you fed up? Are you tired of spending hours and hours looking at price charts without getting significant results? Do you want to get into algorithmic trading without having to program? Do you want to belong to a community that helps you go all this way? If any of these questions are answered with yes, this training is for you. Now that you've seen who I am and who this training is aimed at, let's see what goals we're trying to achieve with this training. The fundamental objectives I like to describe as a triad of objectives. The main objective will be to know how to create a robot, but not just any robot. We want to know how to create the robot that I need. I would like to emphasize this because when we have software at our disposal, such as Strategy Quant, where the possibilities are, in fact, infinite, it's easy to add signals, add entry and exit options, and press the button because I want to see how the program begins to spit out strategies and see those equity curves quickly. This is one of the mistakes that most people make when they approach this type of algorithmic trading and this type of software. We're going to teach you how to find the robot we need to find those robots that enter long trends, short trends, and depending on what we need at each moment. Another of the fundamental objectives will be the creation of a robot pool. The creation of a robot pool is very important because, as you've probably heard, the strategies, the robots don't last forever. So it's necessary to have a pool of robots from which we can pull when they are needed. We also need to have them organized and distributed. Think of it as if you were managing a football game. You are the coach and you have your starting 11, which are the key strategies that will be used in the actual game. You have real strategies, but you need to have a suite of backup strategies ready on the bench for when changes need to be made at the right moment. Another objective is to know how to filter for robust robots. Among all the strategies offered by this kind of software, robustness testing will enable us to filter the vast amount of robots we can produce in a session. Robustness tests allow us to identify those which will give us the greatest certainty within the boundaries of what a robotic system can provide to transition to real account. This aspect, robot filtering, is crucial. Here, for instance, we would include Monte Carlo tests, the forward war matrix, the multi-market tests, multi-time frame tests, and so forth. Another objective will be to test our robot to ensure that the results we have found in our laboratory during our search process in Strategy 1 are consistent with what we later observe in the demo. The final objective will be the creation of a diversified real portfolio. I know many people are interested in creating robots to pass certain funding tests. This can certainly be done. We can create a robot for portfolio creation or a robot to pass a certain funding test depending on drawdown requirements such as maximum daily drawdown, total drawdown, and so forth. All this can be programmed into the system to search for a robot within the parameters that we set. So don't worry, every aspect is covered. Having discussed the objectives, we can look at how we will achieve these. We will accomplish these objectives using three key methods. The first is having a system that allows us to meet our set objectives. But the method also needs to provide the three stages that I'm going to present. It has to be a method that works for our specific needs and provides strategy and robots that will be consistent in the market. Adding the robots that might be more interesting, you can see that in just a few months we have a 2.55% return, which is not bad. We hope that this will grow, but I am showing it to you so you can see how beneficial it is. Everything we are telling you has support. In addition to being a method that works, it has to be a replicable method because it needs to be adjustable, improvable, and explainable to other people. The fact that it's replicate implies that it has to have a workflow that's clearly identified. Here is a brief summary of the entire process we are going to explore. We would start, as I mentioned, working with Strategy 1, which can do two types of search, automatic searches or directed searches. The automatic searches will be based on the builder that Strategy Quant brings, the construction module, and directed searches are done with a program inside the Strategy 1 switch called AlgoWiser. In the automatic searches, we can do them randomly. That is to say, with an absolute random system or with data mining using genetic algorithms, either one way or the other. The idea is to end up getting a strategy pool, as we said previously. Optimize all these strategies. In the optimization, there would be all the robustness tests and then parameter optimization, currency management optimization, input optimization of departures, and so on and so on, to finally go to a demo account, a real account. Some people directly switch to a real account with a micro lot. Some people first go to a demo account and then switch to a real account. Well, you can do this. It can be seen. And in addition to being a method that works and is replicable, it needs to be an adjustable method. And when I say an adjustable method, I'm referring to this. Within the very nature of the method, we need to have the ability to make adjustments to the method so that it adapts to possible market changes. The volatility of a certain financial instrument, changes introduced by the broker at a certain time, and so on and so on. By adjustable, I don't mean that we are going to change randomly. It is very common for people who are starting out in trading for the first time to see a strategy in a YouTube video that is promoted as a super strategy. I'm going to do it. I'm going to look for strategies this way. I haven't finished determining if that works. If it doesn't work, I haven't analyzed it thoroughly, but I received a signal through Telegram, so I'm going and we're changing constantly and senselessly. No, we are not referring to this. We are referring to it being a method that has the possibility of adjustability. Very well. Once we have the method, we need the tools, and even if we have the best method in the world, if we do not have the tools to carry it out, it is totally useless to us. About the tools. I have told you that we are going to work primarily with the Strategy Quant suite. The Strategy Quant suite is mainly composed of 4 programs such as Strategy Quant itself, as are the Quant's Data Manager, the Quant's Analyzer, and the Algorizer that I have mentioned. And initially we are going to work with MetaTrader 4, MetaTrader 5, but just in case you don't know. The truth about platforms is with every update, new platforms are added. Additionally, the Quantified model team has secured a 3-month license for the first 10 students who enroll in these workshops. Usually Strat provides a 14-day license, and after 14 days you either need to generate a new license with a new email for another 14 days or buy one of the licenses they have available. The switch is not cheap, it's not one of the most expensive on the market, but I believe that everything it offers, all the study and analysis capabilities that it allows, have made it a well worth investment for me. Once we have the method and tools, what's the third essential thing we need? It's capital. Capital is our raw material. We can have the best methods and tools, but if we don't have capital, we can't do trading. This thing about capital has drastically changed in recent years with the introduction of a broker like Darwin's. Before the rise of Darwin's and its Darkwins, and more recently Darwin X0, if you wanted to work with Forex and maintain a diversified portfolio, you needed to have at least a $10,000 account. Now you could be looking at $30,000, $50,000, ideally around $1,000 or $100. This created a significant barrier for retail people, newcomers who wanted to start in this world. Darwin offers the possibility of maintaining an audited track record through a small fee. Specifically, Darwin is at 0. I think it's 38 euros per month. You can connect your robots, for example, within MetaTrader to the broker and audit all your operations while maintaining total control of your strategy as it isn't visible to others. This will also allow you to raise capital from Darwin's itself and from external investors. As your operations become more profitable, you will be able to manage your own capital, the capital that Darwin's assign to you each month, and the capital that external individuals invest in you. So, the initial limitation we had on capital has significantly blurred. That's it for the presentation. I didn't want it to be too long or tedious. I have also left some time for your questions. You can turn on the microphone if you want to ask anything. Sorry, here's a question from Jamie. Will we be using training searches in sample and out of sample? Well, yes, we will. We will use it. For example, within Strategy 1, to prepare the data that you will be working with, you can efficiently manage the data area that you are going to use in sample and the data area that you are going to use out of sample. Now, let me share the screen again and show you this in a moment. Okay, see my strategy right here? As you can see, someone tell me. Because I can't hear anyone, nor can I see it. Can it be seen? Yes, it can be. It can be. Moving on to the data to start our search, you see here you can not only set an in-sample period, which would be this blank section, but you can also set the out-of-sample period. From version 127 onwards, you can also add a sample validation period, a validation period of what we have been studying, let's say what the algorithms have been exploring in this period. You can do this with as many parts as you want, from both in-sample validation and from the out-of-sample itself. This is remarkably versatile because you can set it up however you wish. You can even have certain areas where trading does not occur. Additionally, you have here a tool, for example, to see how that financial instrument has been performing in the study period. You also have a 14-period average true range here that also provides a measure of the performance. This tool evaluates how the financial instrument has performed in case you want to adjust the in-sample or out-of-sample periods at any given point. So, as I say, it is very versatile in that regard. I hope I have answered the question. You're welcome. You're welcome. I don't know if you have any more questions, but I assure you the whole thing about in sample, out of sample, the possibilities are enormous. Don't worry about it. We can do it in different time frames. For example, which markets will we be dealing with? Chimey is asking. Basically, we are going to focus on Forex, and within Forex, I would start with the majors, primarily because it may be the simplest to start with. For instance, I have a few ideas for the NASDAQ. When we look for trend strategies, we look at NASA. In the index, we usually look only for long positions because it usually yields good results. Also, you will be assigned some tasks between one workshop and another because it doesn't make sense for us to begin generating strategies in the workshop and spend hours generating strategy just chatting. I want the workshops to be time efficient. Let's focus on what is important. Platforms keep updating and adding new ones. You know, the Quantified model team has obtained a 3-month license for the first 10 students who enroll in these workshops. Normally, Strat gives you a 14-day license, and after those 14 days, you either have to generate a new license with a new email for another 14 days or buy one of the licenses they have available. It's true that it's not a cheap switch, it's not one of the masks on the market, far from it, but I believe that for everything it offers us all the study analysis capabilities that it allows, and research, it has been a very well done investment. So, once we have the method and tools, what's the third leg that we need? Well, capital, gentlemen. Capital is our main subject. We can have the best method and the best tools, but if we don't have capital, we won't be able to trade or enter this world. It's true that capital has changed drastically in recent years with the appearance of a broker such as Darwin, with their Darwins, and now more recently Darwin $10,000, for example. If you wanted to work with Forex and have a moderately uncorrelated portfolio of between 6 and 10 strategies or robots, it was essential to have an account of at least $10,000. If we talk about the future now, well, the values can be raised to 30,000, 50,000. Ideally, it would be almost $1,000. All this represented a great barrier for retail people, for all of us who wanted to start in this world. Darwin already offers us the possibility, which we'll explain later, for a very small fee. Specifically, Darwin is zero. I think it's 38 euros per month. You can make an audited track record on the platform, connect your robots that you have within MetaTrader, for example, to this broker, and audit your entire operation. You also audit it with total control of your strategy because your strategy is not visible to others. This will also allow you to attract capital from Darwin's itself and capital from external investors. As your operation becomes more profitable, you'll manage your own capital, the capital that Darwin's assigns you monthly, and the capital that third parties invest in you. This blurs the initial limitation that we had regarding capital. That's it for the presentation. I didn't want it to be a very long, tedious thing. I've left some space for your doubts and questions. You can activate the microphone if you want to ask questions. Amy has a question. Will we use training searches in sample and out of sample tests? Yes, we're going to use it. And here's the thing, within strategy 1, the timer. To prepare the data with which you are going to work, you can perfectly manage the data area that you are going to use in sample and the data area that you are going to use in out sample. Let's see, I'm going to share my screen again, and I'm going to show you in a second. Okay, you see my strat. I don't know if it can be seen. Let's see if someone can tell me. Yes, I can't hear anyone, and I can't even see it. Yeah, it can be seen. No? Okay, look, when the data to start the search, you see here, you can not only put an in sample period that would be this blank, but you can also put the out of sample period. Okay, the out of sample period. But the thing is that in addition, since the version I think was 127, you can also add a sample validation period, which is a validation period of what has been studied. Let's say what the algorithms have been looking for in this period. You can also do well with as many parts as you want, both of the in-sample validation and of the auto sample itself. Okay, all of this is also tremendously versatile because it can be put basically however you want. Okay. In addition, even some of these areas, you can directly tell it that in this area, not to make trades, and you also have here a tool, for example, to see how that financial instrument has been behaving in the period of time that we are going to study it. You also have here an ATR of 14 periods that also gives us a measure of that the financial instrument has had in case you want to move the parts in sample of sample at a certain moment. So as I say, it is very, very versatile in that sense. Okay, I don't know if with this I have answered the question. Nothing, you're welcome, you're welcome. I don't know if you have any more doubts, but I'm telling you the whole issue is in sample. The samples, the possibilities are enormous. Don't worry about the meaning, and also you can do it in different time frames. For example, markets, which ones will we deal with? Jamie is asking. Well, we are mainly going to focus on Forex, and within Forex, I would start with the largest basically because a priori, it may be the simplest to start. I also have, for example, I thought of some things for the NASDAQ. When looking for trend strategies, we search in NASA in index. Generally, we only search for long because it also gives very good results. Also, well, you are going to be given some tasks between one workshop and another because, hey, it doesn't make sense that in the workshop we start generating strategies, for example, and we spend X hours generating strategy. They are chatting. No, I want the workshops to take advantage of the time, not to mess around like it is said vulgarly, but let's go to the granite, to what is interesting and all that. Because you see here in